If you're a doctor, resident, fellow dentist, or medical professional and someone told you that you need 20% down to buy a house right now, that's probably not true. There is actually a loan program specifically designed for physicians that can allow you to buy with little to no down payment, avoid monthly mortgage insurance, and even qualify while carrying massive student loan debt. Today we're breaking down one of the most talked about options in the Denver, Colorado area, the CMG home loan, the physician's loan. We're going over a number of things during this video, like who qualifies for this program, how the program works, credit score requirements, the big advantages while utilizing this program, potentially the downsides that nobody talks about, and whether this is actually a smart move in today's market. So if you're in the medical field and thinking about buying a home in the next 6 to 12 months, this video is something that you need to watch. Hi, my name is 𝐃𝐈𝐑𝐄𝐂𝐓. I'm so glad you're here. I am a Colorado award-winning realtor helping clients just like you each and every day, reaching out to me from this incredible platform, YouTube. If you are loving this video, if you're liking videos like this, please feel free to show me some love and hit that subscribe button. Jumping into step one, what is a physician's loan? Let's start simple. A physician loan, sometimes called a doctor loan or a physician mortgage, is a specialized home loan program created specifically for medical professionals. The reason these programs exist is because traditional mortgages and guidelines don't always work well for doctors and people that have debt. Think about it. Many physicians graduate with hundreds of thousands of dollars in student debt. A lot of residents relatively have low income initially. Some buyers are just starting new jobs and haven't even received their first paycheck yet. And many medical professionals don't have years of savings sitting around because the length of schooling that they've just endured. So essentially, traditional lending models can punish that situation in a sense, and physician loans programs really just are designed to make it a little bit easier and a little bit less hard to jump into your first home. And that's where this program comes into play. This program is an extremely attractive model to any type of medical professional. And let's jump into who qualifies. Let's talk about eligibility because this is really where the program can slightly differ depending on the lender and market conditions. But generally, CMG's physician loan is designed for medical doctors, dentists, veterinarians, optometrists, pharmacists, even potentially veterinarians. In many cases, residents, fellows, and even students who have completed medical professionals can also qualify. One of the biggest advantages here is that employment contracts can often be used as proof of future income. That means you may not need months of pay stubs from your new position before qualifying. So if you're relocating for residency or starting a new attending, say, role, this can be a huge advantage. Obviously, just understand that every loan scenario is different. So approvals still will ultimately depend on underwriting, debt to ratios, reserves, and your overall credit profile. But compared to the conventional option and conventional financing structure, physicians' loans are far more flexible. Let's talk about benefit number one, low or no down payment. So this is the feature that gets the most people's attention depending on the loan size and the borrower profile. Physicians' loans can allow 0% down, 5% down, or a reduced down payment option compared to conventional loans. So for a doctor buying an $800,000 home, this avoids a massive down payment, which could really preserve a lot of liquidity for investments, emergency savings, possibly even just furnishing your home or simply maintaining a lot of flexibility with your budget. And for many medical professionals coming out of residency, cash flow matters more than ever, essentially avoiding having to tie up all of your funds and exhausting all of your money into a down payment. Benefit number two, no PMI. So that's your private mortgage insurance, and this is huge. Normally, if you buy a house and you do not put 20% down on a conventional loan, you will always pay PMI, which is your private mortgage insurance. This can easily cost hundreds of dollars per month, and many physician loan products eliminate PMI entirely, even when you put down the very minimal down payment. So that's one of the biggest advantages and reasons these programs can simply outperform traditional financing structure and for a high income producing medical professional, something that I always recommend at least looking into essentially. Benefit number 3, student loan flexibility. This is where physician loans really separate themselves from kind of all of them. Traditional loans can heavily penalize large student debt and your balances. Physician programs may use income-based repayment calculations, adjusted debt formulas, or alternative qualifying methods. That really just opens your flexibility and can dramatically improve your purchasing power, which is huge. And honestly, without programs like this, many doctors would qualify for far less house than their actual earning trajectory really supports. So I think it's at least an option and scenario you should run by. Benefit number 4, employment contract flexibility. This is one of the massive one for residents or relocating physicians. In many cases, an extended employment contract can be enough to qualify you before you even come to your first day on the job. And that essentially means to you, this will help you buy or secure a home when you're relocating. It avoids temporary housing and really avoids you having to settle immediately, which is a huge advantage really during this huge career transition. Now let's talk about credit score because this matters more than people think. While exact requirements can vary based on a number of things such as loan amount, occupancy, loan product, and the type of physician's loan you're looking into, ultimately, this also transitions into underwriting guidelines. Many physician loan programs typically look for scores in the mid 600s or higher range, but realistically, the stronger your score, the better your options generally become. And this is just all over the board. Generally, 700 plus when referencing your credit score is going to offer more favorable pricing, and 740 plus tends to unlock the best overall terms. So just understand and remember that this isn't just based off of your approval. Credit score impacts a number of things like interest rate, monthly payment, reserves required in your bank, and sometimes even maximum financing and your total power purchasing amount. So if you're planning to buy within the next year, protecting your credit should absolutely be a priority. And just really, I mean, you know what to do and what not to do. Avoid unnecessary debts. Really keep your overall debt utilization really low or on the conservative side. And really just avoid those large financial deposits and withdrawals that really don't attribute to your home goals. So avoid a lot of the question marks, if you will. Now let's really just deep dive into the part that most videos skip when they touch on physician loans, because physician loans are an incredible product in the right situation, but they're not automatically the best choice for everyone, and I'll be the first to kind of announce that right off the bat. The first downside is the interest rate can be higher. Most physician loans typically do carry a higher interest rate than conventional loans. Why? Because the lender is taking more risk when it comes to lower down payment, higher loan amounts, and less strict guidelines during underwriting process. So more flexible wiggle room with underwriting. So yes, avoiding PMI may still save you money overall. You should still compare the idea of the total cost when comparing it to a conventional 30-year term to the physician loans. Downside number 2, buying too much house. This happens constantly with high income professionals. Just because you qualify for a large home does not mean you should buy at that maximum approval amount. And this is really something I tell my first time home buyers all the time as well. Market timing matters. If you're moving to a city temporarily for residency or fellowship, buying may not always make the most sense. And if you're renting, that's okay. You need to consider a number of things like how long you'll ultimately stay in the home, closing costs, which is typically about 2% of the purchase price, appreciation potential, taxes, as well as maintenance. So sometimes renting for a short period of time is actually the best decision, and I'm the first one to kind of voice that's always okay. So in my opinion, physicians loans tend to make the most sense for high-income medical professionals, buyers with strong earning potential or a huge trajectory of growth, people who want to preserve their cash and liquidify that, and doctors carrying substantial student debt. This program could also make really good sense for you if you're relocating, a relocating physician, a resident, a fellow, and potentially a first-time buyer entering really expensive markets. So the flexibility can genuinely create opportunities that conventional financing just cannot. But again, you still want to look at the big picture of all of your goals when it comes to monthly payment, loan terms, and emergency savings. And what does that financial stability look like for you and your family? So my final piece of advice is if you're considering using a physician loan, here's what I'd recommend. Number one, talk with a lender who actually understands the physician financing and the product that you're trying to buy into. Not every loan officer specializes in these products. Number two, compare multiple scenarios. So look at physician's loans right next to conventional loans, and also even potentially bringing in jumbo financing depending on the price point. Make sure that all makes sense to you and focus on your monthly lifestyle after closing. So what does that look like all in budget, what you're looking to spend, while not exhausting your entire bank account every month just to be able to say you own a home. Please feel free to hit that thumbs up button. Please don't forget to subscribe. And if you're looking at purchasing in the state of Colorado, maybe you're a first-time buyer, a physician, I would love to help. Reach out at any point, and I will catch you guys in the next one. Bye, guys.